Daily bias by far is the most important thing in all of trading, and without daily bias, it doesn't matter how good your entry pattern is, you will not become a consistently profitable trader. So in this video, I'm going to teach you what daily bias is and how we can use it to consistently predict price action and become profitable traders. But let's get into the video. Okay, so what even is daily bias? Daily bias, in its most simplest form, is just a higher time frame direction. It literally is, where is price going to go on the higher time frame? That's it. It's that simple. Now, why do we care about the higher time frame? The higher time frame move the market. Those who have billions, so smart money, big banks, hedge funds, insurance companies, they only trade on the daily and the 4-hour chart, right? But this is the key chart that all of smart money, everyone with billions are looking at. But we want to ride, essentially, we want to follow the trend that smart money, these big institutions are doing, right? That's what we want to do. So
there's only 3 time frames that you actually need for daily bias, and those are the weekly, the daily, and the 4-hour chart. Now you need to use it in that order, right? So you have to start with the weekly, go on to the daily, and then the 4-hour chart, right? So you've got to use all 3 of them. Now, what we're going to do is we're going to start off on the weekly chart. Now, this example right here on dollar yen is the hardest example I can give you, right? It's the hardest example. I went through all my watch lists, right? I scrolled through each and every single pair, and USD JPY by far is the hardest example. So if you can understand this, you will understand literally any pair, any asset, anything that you trade. So we're on the weekly chart, and the first thing you want to do on the weekly chart is you want to look at the most recent price action, right? We want to look at the most recent price action over here. Right? We don't care about, this order block all the way down here. We don't care about this. We care about, what's actually relevant to us. And this is the current weekly chart candlestick, right? So this is today's price action right here. So we care about this recent price action here. That's the only thing that we care about. And the first thing that I see, and for those who don't know, I always do my analysis live. So what I mean by that is I haven't gone below the daily or 4-hour chart on this, right? So I'm literally telling you exactly what I would do when I get on the chart. So the first thing I'm seeing here, I don't know if you guys see it, but if you've watched my channel for a long time, you'll know, right? And I'm sure most people know, at this low here, there's lots of liquidity. So let's mark out this low here, right? And this is what you always want to do, right? You always want to look at liquidity first, right? Liquidity is king. So we always look for liquidity first when determining daily bias, right? We want to look at old highs and old lows. So old lows here and old highs here. Now, at this low here, there's lots of liquidity, lots and lots of stop loss orders at this low right here. And you see this? You see this wick? How we come down, we wick out this low and instantly reverse. That right there is a liquidity sweep, right? Very, very important. And if you don't understand liquidity sweeps, don't worry. There's a full, completely free 2-hour trading course where I go into stupid detail about liquidity sweeps. But if you understand liquidity sweeps, you'll know exactly what I'm talking about here, right? Because what price really does, or what price really did, is you see how we were dead bullish, right? Price came all the way down. It took out liquidity here. Remember, this is the weekly chart, right? This isn't the 5-minute or 1-minute chart. This is a major time frame that all the banks, all the hedge funds, all of smart money, everyone's looking at this chart. Everyone's looking at this chart, and only smart money move the weekly chart, right? Retail can move the 1-minute chart, but smart money are moving the weekly chart. And at this low here, lots of liquidity. Price comes down, it wicks out this low, instantly starts reversing. That right there is a very bullish sign. Very, very, very bullish sign. So that's the first thing that I noticed. So let me just mark this out. Let's actually write this down here. This is what you always do, right? So when you get onto your charts, the first thing you want to look for is liquidity. Now that liquidity has been swept at this low here, the next thing we do is we study this high here, right? Has the liquidity been taken here? No, right? And this is really, really important. Really, really important right here. Here is a fair value gap, right? It's a bearish fair value gap. And let's mark this out like this. This is our bearish fair value gap. Now, can you see how price literally comes all the way up, taps it, and then instantly reverses off in the opposite direction, right? You see how price, we have our liquidity sweep like this. Price comes all the way up, it taps this fair value gap, and then starts to retrace, right? That right there is bearish. Right, that's bearish. Now, you might get confused, and this is why I said this is a very difficult example. You might be like, oh, see, if we had a liquidity sweep, and if we just zoom out a bit, like this, the overall direction is bullish, right? What's actually going on here? What's actually going on here? And for those who don't know, right, on Twitter or X, I called this live, right? When we were all the way down here, I called this, that we're going to hit this fair value gap. So there's me bragging a bit, but if you, if you follow me on X, you'll know what I'm talking about. But what's really going on here, and it's just so important that you understand this, right? We are in, if we zoom out, we are in an overall bullish trend, right? Pretty obvious. If you ask anyone, what trend is this, right? What trend is this on the weekly chart? Oh, this is a bullish trend. What's actually going on here, right, is price is at all-time highs on yen. This is all-time highs. Now, obviously at all-time highs, there's no liquidity, right? No one's shorting at all-time highs, right? No one's gonna, imagine if this was the highest candlestick and none of these down close candlesticks were here. No one's gonna start putting their stop loss orders at all-time highs, right? Only now, when price starts to come all the way down, to allow people to start shorting, and by people I mean major banks start putting their stop loss orders here. Right? They're shorting on the weekly chart because they see price comes down. Now price is actually going down to take out stop loss orders here. Right? It comes down, it takes out stop loss orders here, and it instantly and aggressively reverses in the opposite direction. Now you might be wondering, okay, what's happening here, T? Like, what's actually going on here? Why have we hit this bearish fair value gap and started to retrace? The reason we've done that, this is so important, it's something for your notes, right? Is price doesn't move in straight lines, right? It doesn't move in straight lines. Now, smart money traders who are going to target this high, so let's mark this out, right? Let's mark this out all the way like this. This right here is, it's a bit of a weird line, but let me just do it like that. Right, this right here is liquidity, right? This is our major liquidity, and what's really important about this is all-time highs. I'm just going to mark this out as ATH. Liquidity, this is all-time highs. This is the highest that yen has ever been. And some people, for whatever reason, are obsessed with picking all-time highs, right? You see this on, the S&P and NASDAQ. People are just obsessed with picking all-time highs, trying to capture some major gamble where, it drops 10, 20%. You don't need to do that. But some people, for whatever reason, they're shorting here and they're putting their stop loss orders at this high here, right? There is liquidity here overall. And if you zoom out, the overall direction of this market is bullish, like we said. Now, towards the end of this video, and for those who still watch, I'm going to give you something very, very advanced that will probably change your trading forever. But that's a little golden nugget, and it will make a lot more sense on why price is actually bullish overall and why we're taking out this liquidity. But you can see what's going on in this price action alone, right? Because I don't want to make it too complicated for you. What's really going on here is we've had our liquidity sweep. The overall direction is bullish. Is we are looking to target this high. Now, price doesn't go in straight lines. So what I mean by that is price is really, remember this is our liquidity sweep, right? Price is coming down to allow smart money traders to start buying at this fair value gap, this order block, optimal trade entry, to do that, right? The exact same thing, remember, this is the exact same thing we see on the 1 minute, 5 minute, 4 hour chart, 15-minute chart. The exact same thing where we have liquidity sweep, obvious liquidity, retracement, up. The exact same thing happens on all time frames, right? And you might hear ICT or other people say price is fractal. What they mean by that is this, right? The exact same thing that happens on the 1 minute chart happens on the weekly chart. Now, what that means for us as traders, we're not trading the weekly chart, is it means for us, overall direction is bullish, right? The overall direction is bullish because if we just look at this fair value gap here, this bullish fair value gap, right? Mark this out. Okay? Price comes out, look at this, right? See how we wick into the fair value gap and then we instantly start moving off in the opposite direction on the weekly chart. That right there is very, very bullish. And another thing that's really important is if we get the Fibonacci from this low to this high, right? Anything below the 50%, this light green line here is the 50%. Anything below the 50% level is a good buy, right? Smart money traders will not buy until price gets into the lower 50% level, right, of a price swing. They will not buy until price gets into this lower 50%, right? Very, very important. They're not going to buy up here. They're only going to buy when it's in the lower 50%, right? And remember, you might be thinking, oh, well, who's trading the weekly chart? Smart money traders are literally buying the weekly chart. They're buying this fair value gap with their stop loss hit order here, targeting all-time highs. And they'll hold on for months, as long as it takes, right? Because they have the money to do so. Now, we're not doing that, but by studying what they're doing, we can almost get on their pigtails, right? We can almost copy what they're doing, right? And pick up some crumbs that they leave behind. But those crumbs are worth, thousands, millions. So for them, you've got to remember, they're trading billions, right? So, a few million, it doesn't mean anything to them, right? So they're doing all their orders, all their analysis on the weekly chart. And if we see, below the 50%, just look at this, right? Look at this. So you see how price starts gapping down, right? Strong, aggressive candles down. Look what happens when we hit the 50% level, right? Look at what happens when we hit the 50% level. This body here almost respects it perfectly. We have a bit of bullish movement here. Okay, we have this candle here, this bearish candle, but where did it go? Look at this candle, where does it go? It wicks straight into the fair value gap. And then this candle here almost fills the fair value gap entirely, and then we start to shoot off. And now we're above the 50% level, right? Very, very important. Okay, so once you've got your liquidity, right, so we've looked at liquidity here, and then you've looked at your fair value gaps, here, and here. The next thing you want to do is you want to start looking at order blocks, right? Now, on the weekly chart, we don't even hit this order block. We don't hit it. Let me just make this very clear. We zoom all the way out like this, right? All the way out like this. We just miss out on it, right? This is the fair value gap. We just miss out on the order block. That right there is incredibly bullish. Right? A lot of people get confused by that. That's incredibly bullish. The fact that price, let's zoom out. The fact that price couldn't come all the way down and touch the order block here is very, very bullish, right? Normally I say I want price to hit it and aggressively shoot off. If price doesn't even hit it and start shooting off, that's even more, I guess, supports the argument that we're bullish, right? Because price is so bullish it couldn't even get to that point. So that right there is what I normally do on the weekly chart. I look for liquidity overall. I want to see, is price sweeping highs and lows, and where's the overall direction? Then I look at fair value gaps, which sides are being respected, and then I look at order blocks too, just in case. But liquidity and fair value gaps are like my bread and butter. Those are the two things that I really look for. And this is so important now. We've done the analysis on the weekly chart. We know overall that we're bullish, right? We've swept liquidity here. We've got all-time highs here. We zoom out like this. We said this. The overall trend for years. Remember, this is the weekly chart, right? So if I got this is 2021, right? It's 2020. This is 4 years at price action here. Remember, this is the weekly chart. The overall trend for years is bullish, right? So I've got the overall weekly trend, macro trend. We've got liquidity. Fair value gaps are being respected. I want to get on the daily chart, and I want to see the daily chart showing me similar things. I don't want the daily chart to be bearish. I don't want the 4-hour chart to be bearish, and then the 1-hour chart to be bullish. I don't want any of that. I want everything in agreement. I don't know about you. I'm a swing trader. I hold for at most 2 weeks. If you're a day trader, you don't even care about this. What we care about is the most recent price action. So we're only going to look at the last 3 or 4 candlesticks just to give us an idea of what the market's doing overall, right? So for me, and I'm doing this live, by the way, I haven't really looked below the weekly chart for gold or silver, but I'm going to do it live in this video in front of you, just so you know what it's like for a profitable trader to think and analyze these markets, because it's very, very important that you understand that. There's no script. I'm just going to tell you live in price action what I see. And the first thing I see here, right, is you see this big bullish fair value gap. Let's just mark this out. This big bullish fair value gap here. Like that. Look at this. You see how price wicks into it and it instantly shoots off on the weekly chart, right? These big bullish candles instantly shoots off once we hit this fair value gap, right? And if you look very carefully, I know the body slightly closes into the fair value gap, but it's mainly just a wick, right? It's mainly just a wick like this. Price comes in and then quickly and aggressively shoots off, right? What that's called is respect of a fair value gap, right? You might hear this all the time in trading. Price has respected this CB, this fair value gap, this order block, this breaker block. What respect means is that price has tapped it and it's quickly moved off in the opposite direction, right? That's all respect means. Now, in this case, the reason we actually care about this is this tells us that we're very, very bullish, right? The fact that price wicked into the fair value gap, massively, aggressively moved off in the opposite direction. That tells us that we're super bullish on gold, right? Because if price did something like this, if it went into the fair value gap like this, and then it just started consolidating for ages, that is not bullish at all, right? And if it started to break this fair value gap and go down, that's bearish. But the fact that price, let's just remove this, the fact that price tapped the fair value gap like this and instantly shot off aggressively and left another bullish fair value gap here, that tells us that we're very, very bullish, right? So we're going to operate with that lens on the weekly chart that we're bullish. Now, what I mean by that is when we get on the daily 4-hour chart, we're going to assume the overall direction is bullish, right? We're not going to look for a market structure shift on the 1-hour chart. We're just going to look for the overall direction of the market. So now that we've got the direction on the weekly chart, we want to get onto the daily chart and see what we can see. Here we are on the daily chart, and like we said on the weekly chart, overall we are bullish. Now, I know lots of smart money traders are going to be like, oh, look, it's easy, market structure shift. Yeah, look, you can take trades here, but look at these candlesticks. Like, look at this, right? Look at these strong bullish candlesticks. There's one down close candle here. Right, look at this, from this low to this, guess this bit here, or this high here, right? Or this high here, this liquidity pool here. Look at all these strong, aggressive, green up close candles. You have one little down close candle. And then look at the way down. Look at all these choppy, large wicks. For every red candle, there's a green candle, right? Very choppy, very lethargic. We slowly, look at all these dojis here. We slowly take it out. That right there is telling us that we're bullish overall, but price is slowly coming down just to allow smart money traders to buy the dip, right? Buy cheap. And we talked about that on the weekly chart, because what's really happening here is overall we're bullish. Look at how strong the bullish candles are compared to the bearish candles. What's really going on is it's just allowing smart money to buy at the below the 50% level, right? That's what's really going on here. So all of this right here is accumulation. Look at all these dojis here. This is smart money buying, 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 and telling their friends to buy. That's what this is. Smart money buying, buying, buying. They're accumulating all their orders here. And then what they're going to do is they're going to ride price all the way up to this, right? Ride price all the way up like this. All the way up like that. Now, we don't care about, we don't have to trade the daily chart, but we can trade in this direction using the exact same logic they're doing. So that's the reason why price comes down. Lots of traders are going to get chopped up, shorting dollar yen, and then they're going to lose a lot of money. Like, who wants to be in this mess here? Like, who wants to be shorting dollar yen in it? Yeah, okay, you get a few good moves here, but who wants to be shorting these large weights? Because what's going to happen here, and you're going to see this all the time, you're going to short, right? You're going to have a liquidity sweep, and you're going to do what I tell you, right? You're going to put your stop loss at this liquidity sweep, and it's going to get swept again, and then it will come down, and it will just chop around, it will take out lows, take out highs, and it will just be the awful price action that will just confuse you, blow your prop firm account, and break you. Because trust me, I've done this for a long time. You just want to avoid this price action. But what we want to do now that we know that, now that we understand the overall direction is bullish, is we want to start studying fair value gaps and order blocks now, right? So let me just make this very clear. Right here is an order block. So let me just mark this out. This is an order block, and it'll be clear on the 4-hour chart, but I just want to show you on the daily chart. Right here is an order block. Price wicks in, instantly shoots off in the opposite direction. Very, very, very nice, right? We always like to see that. But this price action here, we have a fair value gap. So let's mark this out. Fair value gap here. And again, price does not touch it. It comes down, comes close to it, but now we're starting to move off in the opposite direction. Now, I want to get onto the 4-hour chart because this is getting a bit messy now, but just remember the overall logic that we had on the daily and 4-hour chart, right? Sorry, the daily and the weekly chart. Weekly, we're bullish overall, liquidity sweep, all-time highs liquidity. Daily chart is just retracing to allow smart money traders to buy in this fair value gap, in these order blocks, just allowing smart money to buy before we ride price all the way up to all-time highs. So we're going to get on the 4-hour chart and we're going to look through that lens, right? I'm not going to look on the 4-hour chart and think, oh, how can I short this? I'm not going to do any of that. I'm only going to look for longs, and more importantly, I'm going to look for targets on the 4-hour chart. Okay, so here we are on the daily chart, and now when I'm on the daily chart, I just want to see confirmation of the weekly chart, right? On the weekly chart, we're bullish, and I just want to see the daily chart show us that we're also bullish, right? I'm just looking for confirmation because this is something for your notes. The higher time frame is king. Now, what I mean by that is the higher time frame direction is what the overall market direction is. So if the weekly's bullish and the daily's bearish or the daily's neutral, I'm still going to go with the weekly direction because it's a higher time frame, right? Same thing if the daily is very bullish, but the 4 hours consolidating, I'm still going to go with the overall direction of the daily chart, right? So all else being equal, the higher time frame is the most important, right? So if the higher time frame is bullish, we're going to trade in that direction. So the weekly chart, like we said, was bullish, and I just want to see the same thing on the daily chart. So what does that actually look like? I want to see order blocks and fair value gaps get respected. So let's just suppose, let's do it like this actually. Let's suppose this is like a fair value gap, right? So use your imagination. Let's imagine this is a fair value gap here, and it's a bullish fair value gap. I want to see price touch this fair value gap with like a wick and then quickly shoot off, right? Because that would show me that we're bullish, right? I do not want to see, let's just remove this. I don't want to see price consolidate. Right? I don't want to see it hit a fair value gap, consolidate, and I definitely don't want to see it start to break all the way down, unless it's like a liquidity sweep and we quickly reverse, right? So that's just my thinking process. Every time I get onto the charts, that's my thinking process when I do my analysis. And here we are on the daily chart, and the first thing I'm looking at is this wick here. Can you see this fair value gap? Let me just round this out. Right, now don't worry, this is going quite fast because with experience you're going to get better. So I'm going to give you a high level overview, and there's only so much I can teach you in a YouTube video, and obviously I don't want this to be like 2 hours long, but I'm just giving you my thought process. And can you see how we had, let me mark this out, you see how we had this fair value gap here, right? And you see how price wicks into it and then aggressively shoots off. I know we get a bit of consolidation here. The reason we get that, by the way, for those who are wondering, is price is essentially generating liquidity. Now I can get very, very complicated with this. So $3,000 was our higher time frame target for gold, right? This was all-time high. So what what was really going on here is the market makers or smart money was trying to get people to short gold, right? Because no one wanted to short gold at all-time highs. But when price started to drop, lots of people felt confident putting their stop loss orders here, and then price shoots off and smashes those orders, right? Very advanced that, you don't need to know that. But what we do need to know is, first of all, this. You see this fair value gap here? You see how price wicks into it, instantly shoots off. That tells us that we're bullish. But the next thing that's really important, and this is some of your notes, you see this fair value gap here, right? There's part of the fair value gap that's remaining. And you see that there's part of this fair value gap that's remaining. This bit here has been filled by this wick, but there's part of the fair value gap that's remaining. This wick here, so let's just zoom out. This wick here comes all the way down, taps that remaining fair value gap, instantly shoots off. That is very, very, very bullish. Now, why is that really bullish? Because there's two things that's happened. Prices come down to fill out this fair value gap, even more of it. And more importantly, this is actually a liquidity sweep, right? Because you remember, this is the daily chart. This is the daily chart. So this is the previous day's low. Price comes down, takes out liquidity at this low, instantly reverses off in the opposite direction. I mean, just look at this wick here, right? Look at this wick, right? Price comes down just enough to take out anyone who had their stop loss orders at this previous day's low, and it hits the fair value gap and then massively shoots off, right? I mean, I literally have to zoom out of the chart just to see how fast price zoomed off, right? Very, very, very bullish, right? Very bullish, because what price has done, it's taken liquidity and it's hit a fair value gap, right? Very, very, very strong price action. And this is telling me that gold is super bullish, right? I've not even looked at any of these candlesticks here, but just by studying this, I already know my direction of the market, right? And I'm still bullish. And I'm not getting confused by any sort of bearish fair value gap here, any bearish order block. I'm not trying to short on the lower time frames. I'm just following the overall direction. Now, the second thing I'm looking for, there's no fair value gap here, which is pretty interesting. This right here is your order block. And if you remember, it was actually also a liquidity sweep of this low, right? But this is your order block here, right? And for those who don't know, order block is just the last down close candle before the up move, right? That's what a bullish order block is. So realistically, this whole thing is an order block, right? This whole thing's an order block, but this is something that's really, really important, right? So the body of the order block, that is the most important part of the order block. That's almost like, it's almost the meat of the move, right? Now, if you study like VWAP volume profile, and don't worry if you haven't, but if you have, you will remember, like, you know, on the side of the charts where it shows you that like normal curve, like that, right? That's what an order block is. That's what the body of the order block is. It's that little bell shape on the volume profile, right? Where there's lots of transactions occurred. That's what the body of the order block is. Now, if you don't know what that means, that's absolutely fine. But I paid a lot of money for a course on that, and I know a few other people have. If you understand that, you'll understand that that's what the volume profile actually is. It's just the body of the order block. It's just where all the transactions were. But if you don't know anything about the volume profile, don't worry. All you need to know is the bodies are, it's essentially what smart money trading is, right? Smart money, they're the ones who are moving price, right? The wicks are retail, and the bodies is smart money, right? The body is smart money's movement, their footprint into the market, right? That's what the bodies actually are. So the body of the order block is very, very important, very, very significant. And the fact that we haven't touched the body of the order block, that tells me that we're very bullish, because, and this is some of your notes, right? This is ICT chart stuff here. So if you've got a bullish order block, right, like this, and price doesn't even touch the body, but it touches the upper part of the wick, that is incredibly bullish. So what I mean by that is this whole candlestick is an order block, right? This whole candlestick here is an order block. You see this wick here? This is still part of the order block, but you see how price wicks into it, instantly shoots off. That tells us that we're so bullish that we couldn't even tap the body of the order block, right? We couldn't even tap the body of the order block, right? We could only tap the upper part of the wick of the order block, and then we had to quickly and aggressively reverse in the opposite direction. That tells me we are incredibly bullish. So for me, like, just from the weekly and daily, I would already be looking for longs. But of course, top-down analysis video, I want to give you, I guess, the full analysis. And let's see what else we have here. Okay, so first thing I'm looking at is, you see this fair value gap up here. Smart this out all the way up. This right here is our fair value gap. Now, price wicks a bit below bit below the fair value gap here. Now, I want to know on the 4-hour chart why that is, because it's a bit hard to see in the daily chart what's actually here, right? We've got a doji candle, and we've just got a bullish candle here, right? We've got no fair value gaps. At this point here, I'm going to get on the 4-hour chart. Now, remember, when we get on the 4-hour chart, we're looking for longs. I want to see bullish price action. I don't want to see, let me show you. I don't want to see like a 4-hour bearish market structure shift. Oh, technically price has gone below an old low, so I have to start shorting. I don't want to see any of that. I'm only looking for longs, and ideally, I'm really looking for liquidity sweeps, because what I want to see is an entry like this, right, where this is a liquidity, this is your liquidity sweep, right? Let's say equal highs, high probability retracement here, right price up, right? That's what a swing trader would look for on the 4-hour chart, and you do the exact same thing on the 5-minute, 1-minute, and 15-minute chart. But don't worry about that. We'll talk about entries in, there's plenty of videos where we talk about entries. Let's get onto the 4-hour chart and see what we can see. Like I said, I've not seen the 4-hour chart, so I just want to show you what my thoughts are. So the first thing I want to see is, I just want to see order blocks getting respected. And if we look at this down close candle here, let me mark it out, right? This candle right here. Look at how price respects it beautifully. Look at that. Let me just mark the body out. Right, we just look at that. Look at the wicks. We just tap the order block's body twice, and then we shoot off aggressively and massively in the opposite direction. Let's just zoom all the way out. We shoot off aggressively in the opposite direction. What this means is the order flow, and the order flow just means the overall direction is bullish, right? So don't get confused by the terminology with order flow, liquidity sweeps. Liquidity sweep is just a stop run. Liquidity is just stop loss orders. Order flow is just a direction on whatever time frame they're talking about. And don't get, a lot of people want to sound smart. A lot of people want to sound smart, but it's very, very simple when you start to understand what's actually going on. So this order block's being respected. And this order block here, and again, this is what I always like to see. So let's mark this out. Here's a bullish order block that price doesn't touch. Does not touch it. Very, very nice to see that, right? Because like I said, usually you want to see price hit it, quickly and aggressively move off in the opposite direction. If price does not even touch it, because it's so bullish, that's an even stronger sign. That's an even stronger sign that price is bullish, right? So now that we've studied our price action, we've done all the hard work on the higher time frames. Now I want to look for targets. Where's the most obvious liquidity target? And if we zoom out to the left-hand side of the chart, where is the most obvious liquidity target? And I'm literally telling you guys before I've even spoke about it. This is our obvious liquidity. Now, why? Let's just suppose this was bearish, right? So let's just suppose this was a bearish order block. Does that look like price has respected the order block, the bearish order block? No, not at all. Look how deep we've retraced, right? We've almost retraced 75% into the order block, right? That is not bearish at all. If price was bearish, it would tap the order block, almost like it did here. It would tap the order block and then quickly move off like that, right? We don't have that at all. In fact, we've got price respecting bullish order blocks, completely disrespecting bearish order blocks. That's exactly what we want to see. And at this point here, we're just looking for our targets. So at this high here is our liquidity. And for those who are wondering, why is there not liquidity at this low or this low here? This is why. This is how we actually know that price is going to go through liquidity, by doing the higher time frame analysis, daily buys, all the boring but profitable stuff. That's how you actually know and that this liquidity pool is going to get taken, right? Like, I'm not looking at this low, when price retraces. I'm not going to think, there's liquidity here, price is going to take it. I'm only looking at this high because we've done all the analysis on the higher time frame. So let's just mark this out. So right here is liquidity. And for those who always get confused about what liquidity actually is, it's just stop loss orders, right? It's where the money is, because these large banks, hedge funds can only get into their positions and out of their positions where there's billions and billions of dollars. And on dollar yen, on the 4-hour chart, there are billions of dollars at this high here, right? And at this low here, right? Very, very important. That's so price is going to go and target these highs here. Now, what does that mean? What does this really mean? All of this, analysis that I've told you on the higher time frame that we have all-time highs. What does it actually mean for us as traders? So this is where things get a bit, not difficult, but it's different for every single trader depending on what your trading model actually is. For me, as a 4-hour chart trader, right, as a swing trader, I'm just looking for longs, right? So this would be an example of my entry. Like this, right? Fibonacci, I enter at the 0.705 level. There's no magic in this number. There's no secret Fibonacci. It's just an easy way of entering it. And I learned from ICT, and this is what he used, so I just stuck with it. This is my entry, my very sophisticated advanced entry. Just in the Fibonacci retracement, I target a 3-to-1 in a direction. Notice how I don't target the actual liquidity pool itself, because you don't really need to, right? Price could retrace. So for me, I'm happy, and I strongly recommend you either just aim for a 2 or 3 risk to reward ratio in the liquidity direction. You don't have to target liquidity. You don't have to do anything fancy, especially as a day trader. I get people telling me, as a day trader, let's just imagine this is the 1-minute chart, right? All the way over here, and the stop loss is like this, right? This is the 1-minute chart, and they're like, oh, Steve, do I have to target this liquidity pool on the day? No, no, you don't. We just have to trade in the direction. So let's just remove this. And that's what a swing trader would do. You just ride price up. If you're a day trader, scalper, any of that sort of stuff, you're going to get onto your entry time frame, and you're just going to take every single long entry you see. You're not going to take any bearish entry. You're not going to try and short down to this fair value gap. You're just going to take any bullish entry to this liquidity pool here. Okay, here we are on the 4-hour chart, and right here, I mean, I guess the first thing that comes to my mind is you see this order block here. Let's mark this down. Right, this candle here, candlestick here is your order block. This also could be your order block. Doesn't really matter. I guess you could have this one too, but for me, I either see this one here, where the first bullish move was, or this one here. Right, doesn't really matter. You can choose any. And let's just suppose you chose this as your order block. Right, this would be your order block. And do you remember what I said last time? Right, if price can't even touch the body of the order block here, if it can't even touch the body of the order block, and it just shoots off before even touching it, right? So if it just shoots off by touching the wicks, that right there is incredibly bullish. It's incredibly bullish because it's telling us price wasn't even weak enough to touch the body of the order block, right? It could only touch top part of the wick, and it quickly and aggressively shot. That's what we always want to see. Again, on the 4-hour chart, we're even more bullish. Let's just make this super clear, right? So this is the upper part of the order block, right? This is the wick here. Look at this, right? Look how we wick into it, instantly and aggressively move off in the opposite direction. That right there is exactly what respect of an order block, respect of a fair value gap, respect of a breaker block, whatever you want to call them. That is what respect of a PD array is, right? When price comes down, it touches the key level and it quickly moves off in the opposite direction. That's exactly what we want to see. And that there is even more confirmation that we're bullish, right? Even more confirmation that we're bullish now. This bit of price, I'm just looking at this, I guess live, right? This bit of price action's a bit messy. It's a bit choppy. We took $3,000 all the way down here, and then we just consolidated for a bit. A little bit of a retracement. Again, so many people are going to fall for this. They're going to think this 4-hour candlestick closed below this low and this low, so it's a bearish market structure shift. A complete load of crap, honestly. Complete load of crap. Look at all the analysis we've done. Are you really going to start shorting gold all the way up here because of a 4-hour market structure shift, right? Complete load of BS. I get angry at market structure because so many students message me and they would be profitable, but it's just market structure that holds them back. They get everything right, bias, liquidity sweep, entry, but for whatever reason, they're just obsessed with market structure, and it's not needed. Honestly, it's not needed. The moment I ditched it was the moment I became a profitable trader. Anyway, I'm ranting. What we want to do now is, we know we're bullish on the 4-hour chart too, is we really want to start looking for our entries. Now, for me as a swing trader, what I would look for, ideally, is for price to come up a bit more, make it very clear that we're going to take out all-time highs here, make it very obvious that we're going to take out these highs here, and then just enter on the retracement, right? That's what a swing trader would do. That's what I would do. Because I swing trade now because I'm too busy to day trade. That's what I would look for. And you don't go below the 4-hour chart. I see a lot of people, who go on the 1-hour chart, and they make the mistake of looking at the 1-hour chart trying to predict daily buys. You only need the weekly, daily, and the 4-hour chart. And again, you don't need the monthly chart. Like, you really don't. You can everything you need is on the weekly, daily, and 4-hour charts. The 1-hour chart and below, we're not doing any sort of higher time frame analysis. We're just looking for entries. We're looking for entries and targets, right? Very, very important, because so many people say to me, oh, hey, Steve, this bullish order block didn't get respect in the 1-hour chart. We don't care about that. We're only looking for entries, right? We did the hard work was done on the higher time frames. We used the higher time frames for our direction, and we used the lower time frames for our entries. So here we are on the 1-hour chart. We've got this giant, probably a news candle. I think this is not. I'm not even sure what this was. We've got a giant bearish candle here. Again, a lot of people think this is a market structure shift. I mean, it's kind of hard to tell on the 1-hour chart because we've got this massive fair value gap here. Let's just mark it out all the way up here. Huge fair value gap. What I like, just from looking at it, is I like these order blocks up here. Right, now, price is not likely to respect. Let me just mark all these order blocks here. This whole area here is essentially order blocks. Now, price isn't likely to respect this order block at all. But what it is likely to do it's likely to trade up to it, right? So that gives us just a general target of where price is likely to go. But again, the 1 hour chart, it's not the best, right? It's not the best currently, because for me, this price action is not ideal, right? I want to see clearer, obvious liquidity or fair value gap, something that I can target. So at this point, I get onto the 15-minute chart, right? Like this. Let's just zoom out again, right? So instantly my eyes are gravitating towards this fair value gap here, right? Because price does not like to leave fair value gaps up for long. So let me just make this a bit more clearer. Actually, if you are very eagle-eyed, you'll see a little gap between these two candles here. Now, I don't know if I might have mentioned this months ago, right, in one of my earliest videos, because this is very advanced. This little, let me just mark up this little gap here between this candle and this candle here, this little tiny gap. This is something called a volume imbalance. Now, there's a few people ask me like weird terms that they use to describe it. I call it a volume imbalance because I learned from ICT. If you call it something else, that's fine. I call it a volume imbalance personally. And what it is, it's just a gap between these two candles, and it acts as like a very strong version of a fair value gap. So, you know, I'm sure we all know this is the fair. Let me just mark this out again. Right? I'm not going to actually close this. So this is a fair value gap. Let me just do it. From here to here, this is a typical bearish fair value gap, right? Most people are aware of that, right? A fair value gap, you see it quite a lot in price action. You don't see this volume imbalance much, but this volume imbalance here is a very strong magnet for price action. It's almost like a very strong version of a fair value gap, right? Like a super fair value gap, if that makes sense. So price is extremely likely to at least touch this area. And what I mean by that is price is extremely likely to do something like this, right? So this could be a very good target. And remember, this is the 15-minute chart, right? So, you know, a little scalp or day trade up to this level and up to this fair value gap, that can get you, you know, a 3-to-1, 3K in a day. Like, you don't need, like, you don't have to target liquidity all the way up here. You just need a 2 or 3-to-1, 2 or 3 risk reward ratio in the overall direction of the market. That is all you need to be a profitable trader, right? So many people message me saying, hey Steve, do I need to target all-time highs? No, you don't need to target all-time highs. You just need 2 or 3 risk reward ratio in the overall direction and a 50% win rate. That's all you need to be a profitable trader. That's all you need. And ignore anyone saying you need 80% win rate or anything like that, right? You just need consistency. That's all you need to be a profitable trader, is just consistency. So, right, and obviously, you know, at this point, you would use, you know, your liquidity sweep or whatever entry pattern you use. I'm not going to talk about entries in this video because there's so many videos on the channel where I give you entries. So make sure you go check them out if you're unsure about entries. But I just want to give you the overall direction of the market. And at this point, like, we've done the analysis, we know we're bullish, and we're just looking for targets. And for me, this is a clear intraday target. Let's just get on the 5-minute chart. But very quickly, see if we can see anything. Again, you know, you can look at this fair value. I don't want to talk too much about this, but again, always nice to see, right? A little tap of the fair value gap here. I guess, did we tap any order block here? We didn't tap this order block, but we did hit this fair value gap here. But again, you're really looking for your entries here. So you could enter on the fair value gap. You would just miss out on an order block here. You could enter on a fair value gap here. Doesn't really matter. Like I said, the entry pattern is the least important thing. I think price would probably hit this fair value gap too, just by looking at it. But again, at this point, you're just looking for your entries. You can get on the 1-minute chart, whatever time frame you want. This is your target. And this, like here, let me just move it the other way. This is your obvious target. Price is likely to hit this too. Is it likely to take out these highs? Is it likely to take out these highs on the same day? Who knows? But the overall direction, highest probability entries are going long. And at this point, you're just looking for your simple entry pattern. I want to show you something called like SMT diverge. I don't want to make it too complicated, but I want to show you how you can pick the best setups, right? Because if you're trading, let's say 2 pairs, you want to be trading the best setup on the day, right? So what you need for this is you need a very similar market. So gold and silver are very, very similar markets, right? And it's pretty self-explanatory. They're both very precious metals, very, very similar markets. We can compare these two markets. Same thing for, let me just get my watch list up. Same thing for the S&P and NASDAQ, right? Very, very, very similar markets. You can do the exact same thing I'm about to show you on, you know, these 2 pairs. You can also do it on Euro and GBP USD. Right, you can do it on the exact same thing, but the markets have to be very, very similar. You can't use, you know, you can't do CAD JPY and the S&P 500, right? You can't use it on that because they're not related in any way, shape or form. But for gold, its sister pair is silver. And I want to show you why silver is not the best trade. So it's still bullish overall, but let's just talk about it. So this is the weekly chart for silver. This is the weekly chart for gold. So just pause the video, look at this weekly chart here. Right, just look at this weekly chart, study it, and then study this, right? You can probably tell gold is by far the most bullish, but why is that the case? Why is gold the most bullish? And, you know, what does this price action even mean here? So, run the weekly chart. Let's just get back here. Silver right away, it's consolidating, which we never ever like to see. Gold is at all-time highs. Very, very strong, minimal retracements, right? So, see this. Huge bullish move. This is our little retracement. This was your retracement here. This little down close candle like that. Whereas silver, let's just study this bit here. Whereas for silver, where's the path tool? Silver, this is your move here, right? And we still haven't even taken out these highs here. We still have not taken out these highs here. That is not good at all. That's not what you want to see at all. And that tells us that we're nowhere near as bullish on silver as we are on gold. And this is something called SNT divergence, which means, it essentially means that this high here, price had taken this high, right? It had gone up and it had taken this high here. Whereas this high here, the equivalent high, had not been taken, which tells us that we're very, very, we're nowhere near as bullish right now. We still are bullish overall. And this is what a lot of people get confused with. This right here is your bullish order block. The price taps into it. I think it just about touches the body, shoots off, right? But do you notice how when we shoot off, we get loads of these doji candles, long wicks, small bodies, down close candles, not good at all, right? Very, very choppy. And you can just imagine if you were scalping this, just lots of, you know, a little liquidity sweep, another liquidity sweep, slowly moves up, like just slowly grinding up, lots, you know, very difficult to trade, taking out your stop loss, double liquidity sweeps, not good at all, eventually gets your take profit. If you are in a trade, it'll probably take you like 2-3 hours just to hit take profit. It's not good at all to trade. And you can just tell by looking at the weekly chart, with all these large doji candles, the fact that we've not taken out this high, that silver, is not ideal to trade. So we're just going to daily chart. And again, I'm doing this live, so I have no idea what price is actually looking like here. Again, so my eyes instantly see this candle here, the last up close candle before the down move, that's your bearish order block. Like that, right? You see our price, it's almost respecting it, isn't it? Right, we have these little doji candles in there, and now we're starting to, I guess, not reverse, but retrace. And what you really don't want to see, and I always say this to my students, this is like, you really don't want to see this in trading. We haven't touched this order block. We have touched this fair value gap. What that means is price is almost respecting both sides. And this is like the analysis of death. If you see this, you want to avoid this pair or whatever pair this is at all costs. And what that is price has respected the bearish order block and it's respecting these bullish fair value gaps, these bullish order blocks. So it's respecting both sides. And you never, ever want to see that in price action, because if price is respecting both sides, what you're going to get is you're going to get this. You're going to get consolidation. It's going to respect some order block here. It's going to respect some bullish one here. A bearish fair value gap here. Just going to consolidate for ages. You're going to get a double liquidity sweep where it sweeps both sides. Consolidates. Does nothing for ages. Comes out. Comes up. You think it's going to go up and it goes right back down. And it's just awful to trade. You do not want to trade that at all, right? So that is something that will save you so much money right there. If you see price respecting bullish fair value gaps and bearish fair value gaps on the daily, weekly, or 4-hour chart, avoid that pair. Just avoid the pair, find another currency, and your win rate will skyrocket massively, and you will avoid so many unnecessary losers, so many break-even trades, so many choppy trades, and yeah. Anyway, I'm rambling on for quite a bit here. Let's just get quickly on the 4-hour chart. Let's just clean these charts up and get on the 4-hour chart and just see what we can see, right? Because I'm not going to get below the 4-hour chart for silver because it's not really needed. Again, my eyes instantly see this. This almost looks like a liquidity sweep to me. Just mark this out. See this? See these almost triple lows here. Remember, this is the 4-hour chart, so this is very, very significant. Right? This isn't the 1-minute chart. This is a very significant time frame. See how price wicks down? It's not instantly reversed. It's not instantly reversed, which, you know, again, that's what you'd expect for a choppy pair. Hasn't touched the order block either. Again, not ideal. It's not even touched this bullish fair value gap. Not ideal at all. These wicks here, let me just show you. See these almost, what the fuck is this? See there's like 4, like triple, like highs here are respecting this order block here, this bearish order block here, right? Look at that. Look at that. Beautiful, isn't it? Look at that. Tap, 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 tap. Moves down. This bearish fair value gap. Look at this. Also being respected. Almost like a liquidity sweep. price is like respecting all these order blocks, we're just going to consolidate in between, right? We're just going to consolidate in between, right? Like this. Just consolidate, where you hit this again, come back down. Liquidity sweeps here, come all the way back up. Just messing around, and you do not want to trade that all. And what that really means, let's just zoom all the way out. What that really means for you as a trader, just clear all this. It means you want to avoid silver, don't trade it, don't look for shorts, because overall on the higher time frame, it is bullish, but it's slowly going to move up, right? It's going to slowly move up very lethargically like this, very lethargically and slow. You want to avoid silver, don't look for shorts, don't look for longs, just don't trade it. And what that really means is look for gold, look to trade gold, and only look for longs, because gold is in a bull market. It's easy. I mean, look at all these candlesticks here, how strong and aggressive it is. It's one-sided. You've got everything on your side, higher time frame, liquidity sweeps, everything you could ever need. And you only want to be trading gold. And if you do the equivalent analysis on GBP USD and Euro USD, you'll see the exact same thing. I think off the top of my head, I think NASDAQ is essentially the equivalent of silver in this case, and gold is like the S&P 500, where NASDAQ has been very terrible and the S&P very clean. So yeah, but you'd have to double check that, right? And that'll be a good like homework assignment, right? Go through the S&P 500, go through the NASDAQ, and just see what you think, right? But for top-down analysis, what you want to do, start off on the weekly, go to the daily, go to the 4-hour chart. Those 3 time frames, this is very important, those 3 time frames give you your higher time frame direction, right? You've got your bias, your higher time frame bias on the weekly, daily, and 4-hour chart. You do not get your bias on the 1-hour chart, or 15-minute chart, or 5-minute chart. You only get it on the higher time frames. Once you've got your direction on the higher time frames, you get onto the lower time frames, right? The 1 hour, 15-minute, 5-minute, 1 minute, or even the 4-hour chart if you want to be a swing trader, and you look for your entries. Now, the entry I always say, and don't worry if you don't understand this, it's just a liquidity sweep. So let's say you're bullish, which we are on gold, and let's just suppose this is let's say the 5-minute chart, right? You want to see a price come, take out an old low, quickly shoot off, leave some sort of fair value gap here for you to enter, put your stop loss here, and then target a 2 or 3 risk reward ratio. And if you do that and you get a 50% win rate, you will be a profitable trader. You will be a consistently profitable trader, right? All you need is a 2 to 1 and a 50% win rate to be a millionaire. And for those who don't know, if you're not following me on Twitter, you should do. But if you are, you'll remember I met this trader and he had a 45% win rate and he made 117k in a month, right? And I think his win rate was 2 to 1, that's 2.4 risk reward ratio, and he made 117 grand in a single month. And at that moment there, I was like, oh shit, I need to sort my life out, because I was obsessing over win rate. It's not needed. A 50% win rate and a 2 risk reward ratio can make you a millionaire. Congratulations if you got this far, because that was a very difficult pair to determine daily bias on. But if you understand that, congratulations. Now, I'm going to give you a bonus tip, like I said, which I normally give to my paid students. And yeah, this is a golden nugget, and it's the little things like this that make you profitable. People always ask me that, hey, what's the difference between YouTube and your paid program? It's the little. You probably understood it in this video, right? The little things that I mentioned. That's probably what clicks in your mind, right? It's probably not the liquidity sweep, fair value gap. It's probably the little analysis that when a price comes very close to an order block, but then shoots off. That's even more bullish, right? Little things like that is what makes you profitable. But anyway, I'm rambling on. What you can do, right, is let's suppose you're on the weekly chart and you're like, oh, okay, look, it's taking out liquidity here, it's respected the bearish fair value gap. I'm not really sure where price wants to go. What you can do is you can get the futures contract up, and we can look at the dollar index. So if we click the dollar index, remember, we're trading USD JPY. What does that really mean? It means the US dollar against the Japanese yen. Now you might think, well, where am I going with this? We are trading one currency against another. So there's a few things that can happen. If the dollar is bullish and the Japanese yen is bearish, price is going to go up. If Japanese yen is bullish and dollar's bearish, USD JPY is going to go down, right? And if one is bullish, let's say dollar is very bullish and Japanese yen consolidates, dollar yen will go up. And similarly, if the dollar consolidates and JPY is very bullish, USD JPY will go down, right? Hope that makes sense. That's what it really means. If we zoom out here, the overall trend is bullish. Now, if we look at the dollar index, this is the US dollar on the weekly chart. The overall trend on the dollar is bullish. Now, again, you might be confused, like, okay, how do I really know if it's bullish, right? Because because of this, order block. Price isn't really close to any liquidity pool. It's retracing quite a bit. It almost took out this low. How do I really know? This is the golden nugget here, right? Right here, if you type in US 30Y on TradingView, you'll get something called the United States 30-year government bond yield. Now, it sounds complicated. All you need to know is this is the interest rate for the US government's debt, right? So, like bonds and stuff. This is the US government's interest rate. And this is something for your notes. The higher the interest rate, the more valuable the currency, right? So the higher the interest rate, the more valuable the currency is. And it makes sense, right? If you can get 4.673% investing in the US dollar compared to, let's just suppose, 2% in the UK. I know that's not actually true, but let's just imagine that was. If you're an investor, obviously you're going to invest in the US dollar, right? Now you might be wondering who's investing in dollars or currencies. Big banks, big hedge funds, pension companies, those who have money. Not us, but those who actually have, a shit ton of money, they're investing in currencies, right? And the only thing they're looking for is interest rates. So with a dollar, you've got a very, very good interest rate. And I don't want to get too much into macros, but if you probably understand that the Japanese, interest rates even negative or like zero, right? So it's not valuable at all. You don't need to know that. All we need to do is look at the price action. And if you look at this price action, I hope it's pretty obvious where price wants to go, right? Here's your here's liquidity. Here's your liquidity sweep there. Here's your respect of the order block. Let's mark this out. Here's respect of your order block there. Here's your liquidity pool up here. Right? Well, that's pretty obvious, right? Look, listen, it might not be obvious at first, but if you watch that full 2-hour trading course and you binge watch a lot of videos on my channel, this will become second nature. And I recommend that you do that. Just get it over and over and over again into your head, because, or your subconscious mind, for those who know. Those who know what I'm talking about will understand that. But here we go. So price comes, takes out liquidity here, comes up, little retracement, nothing major, not towards these order blocks. Again, comes up, makes it very clear that we're going to go for this high here, right? No order blocks being respected here. No bearish order block. Very clear that price wants to come to this high. Here's your retracement into an order block. What's price likely to do? Go up. What does that mean? What does this really mean as traders, right? Let's just remove this. If the US interest rate is going to go up, right? If it's likely to go bullish and it's going to take out this high, what does that mean? Interest rates are going up. What did I tell you? That means the dollar is likely to go up, right? Because it's higher interest rate, it's more valuable, right? Overall perspective for the dollar is bullish, right? We are bullish overall. So this right here is just a retracement before we continue up. Now you might be wondering, okay, that's cool, interesting. Why do I care about this? This is why we care about this. This is the dollar. This is what this index actually is. This is the US dollar against all the major currencies, right? So GBP, USD, yen, all that sort of stuff. This is the dollar against all the major currencies. If we scroll down, I mean, you don't have to scroll down. If you type in 6J on your charts, right? If you type in 6J into your TradingView charts, you'll get the Japanese yen futures. That is the exact same thing, but for the dollar, right? So this is all the currencies against the Japanese yen. Essentially, it's how valuable is the Japanese yen, right? Whereas this is how valuable is the dollar. This is the dollar against all the major currencies. This is the yen against all the major currencies. Now, you remember from school, spot the difference. If we look at the dollar index, right, just pause the video, take a screenshot, just study this price action here. Right, let's just zoom out. Study this price action here. Study this price action here. What direction is this going in? Clearly bearish, right? What direction is this going in? Bullish, or at worst, consolidation. And do you remember what I said to you? If the dollar consolidates and the Japanese yen is bearish, what does that mean for USD JPY? It's going to go up. Right, remember what I said to you. So, at worst, this is going to consolidate, but we know by looking at the bonds that this is actually going to go up, that we're actually bullish. So if we get Japanese yen, and we just study the price action, I mean, for years and years, this drop was around 2021. We've been bearish, 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 and if we look at the price action, right here is your liquidity sweep. I mean, this stuff works, right? I'm not making this up. This stuff actually works. This is gold dust right here, which I'm giving you. This right here, this works. Liquidity sweep here, price comes all the way down, barely respects the order block. I know we do respect an order block all the way down here, but come on, guys, is that really respect? What's actually going on? Like we said, this is just a retracement here. Again, look at that. It's almost like I work for the central bank. Look at this. Here's the 50% level. Look at price. It hits it, wicks down, wicks down, wicks down, and now it's starting to reverse. This is just allowing smart money traders to start selling, 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 right? Selling, selling, selling. So what does this really mean? Japanese yen is likely to do this. Continue downwards, take out this low, like that, continue downwards. And dollar is likely to go up, like we said, because of the bond yields. Dollar's likely to go up and eventually take out this high. What does that mean for USD JPY? Right, what does that really mean? Let's get all the way down here. What does that really mean? It means we're likely to just we've really done our retracement already. It means we're likely to just do that, right? You guys understand that? And if you zoom out, you can see from the previous price action that I've shown you, that's exactly what happens, right? Remember, the yen was very bearish, the dollar was bullish or consolidating. What happened? USD JPY shot up. And again, this is around 2022, 2021 is when we start getting that big bullish movement on USD JPY. Exact same time when the yen starts to drop. So quick and easy. Oh no, I say quick and easy for a minute. It's a hard way, but once you get used to it, you can just mix and match currencies left and right. Because what you really want to do, and we're getting very advanced here, what you really want to do is you want to match strong currencies with weak currencies, right? So in this case, the Japanese yen is weak, dollar is bullish, right? So we've got strong currency against a weak currency, which is an easy trade. And let me give you another example, just a quick and easy trade. This is what I do over and over and over again. So if we get onto 6N, so this is the New Zealand dollar futures, right? This is, again, the New Zealand dollar against all the currencies. Right, here's liquidity, here's your liquidity sweep, here's the obvious low that we're going for. Completely, if you understand liquidity, you know we're definitely going for this low. And again, there's another low right here. No order book's being respected. We're choppy, we're consolidating. Remember this price action, right? Just close your eyes and make sure it's in your head. Now remember this, right? You see the difference. You see the complete difference between this. This is a lot more. This is pound futures, by the way. 6p. See how GBP, I shouldn't say GBP actually. See how the British pound futures are a lot more bullish than the New Zealand dollar futures, right? What does that mean? If we've got bearish and we've got bullish, what does that mean? It means GBP NZD is going to be bullish. So we get onto GBP NZD. Look at that. And you can see like my looking for an entry. Let's just remove this, right? Look at that. Almost like clockwork, isn't it? Almost like clockwork. Just by looking at the futures contract, you can play matchmaker, and we zoom out. There's liquidity on like the daily and stuff. I don't want to bore you guys, but this is what I do, and you can see literally what I do every single day. And as a day trader, you don't want to be trading any of these like exotic currencies and stuff. But if you're a swing trader, this is a gold mine. This is an absolute gold mine because you can just get into easy trades, right? I mean, it's obviously not the best here, but even here, you could probably take this trade, and by this trade, I mean, you could probably take this trade and become have a winner more often than not, right? And this is a poor trade, like in terms of price action, because I don't want to get too much in depth, but GBP AUD is actually the better setup here, right? So this is the better setup. But anyway, I'm rambling on. That right there was a very golden nugget right there that I gave you. So if you didn't understand that, don't worry. All I'm really trying to tell you to do is if you're struggling with the if you're struggling with the bias, using the currency futures can help you break the deadlock, so to speak, right? So very important. And yeah, I love making these videos. I love making these long analysis videos. I used to do it every week. I don't know if anyone remembers. I used to do it every single week. I used to do the weekly analysis of Forex, but nobody cared. Nobody cared. There's only like 50 people who watched it. So yeah, this is what you need for daily bias. Look at liquidity first. Look at the fair value gaps. You can look at order blocks, just study them. But make sure whatever happens on the weekly chart, you want to see the same thing happen on the daily and the same thing happen on the 4-hour chart. That's all you need for daily bias. And like all things, practice. Repetition is what makes you profitable. But yeah, that's all there is to this video. Make sure you watch the full free 2-hour trading course where I tell you everything you need to know to become a profitable trader. And I'll see you in that video.